Hi everyone, my name is Alex and welcome to the new episode of Yotewo podcast. Today we have a new guest, Nick-Raj Birdi from Imbiba. Nick, thanks so much. It's a pleasure to meet you and have you here as a guest. Thanks so much
Thanks for having me. Finally made it.
Yeah, that's true. Thanks so much for coming. Let's start with a bit of intro on yourself. The first question is your career spans across M&A, private equity, and now gross investing. So with Imbiba, maybe can you tell a bit more about how you got into this industry in general, about your journey here?
Yeah, for sure. I mean, look, my career's probably had like two lives.
Okay.
So the first half was I'm a lawyer by trade, so a corporate lawyer in private equity, and I spent about just under a decade at Kirkland
Nice.
in that field, mostly kind of your pure play M&A transactions, and then a bit more into the kind of real estate world. So the last couple of years I was there was looking at infrastructure, big property plays, which I'm sure we'll come on to kind of later.
Of course,
and a lot actually in the data center field. So I kind of got to a point where I was like, I had a bit of an itch to scratch. And I thought, well, either I stick or twist, right? So you kind of carry on as you are, which would have been great. And it was a fantastic learning experience. At an amazing firm, amazing clients, amazing deals, but ultimately I was like, this. I do want to scratch this itch and try something else and see if there's anything else there that probably kind of fulfills a bit more, I guess, intellectual curiosity and also helping people on the ground. So then I wrapped up at K&E and pursued an MBA. So was at London Business School for a couple of years. And during that, I was kind of, it gives you a bit of time to think about where do you want to go and what do you want to do. Exactly. And growth investing was always in the back of my mind. And I'd done a couple of deals while I was a lawyer there. And it felt like quite a natural transition. So, it's looking at the fundamentals of a company, which was what I was doing as a lawyer, but obviously on the execution side. And I thought, actually, this is where you're on the field of play. That's cool. As opposed to just purely analysing it from the sidelines. So I ended up interning at Imbiba, which is a growth equity fund during my MBA. And I've been there for almost a year and a half full time now.
Nice. That's amazing. It's really interesting because a lot of people that I'm talking to, a lot of VCs and founders in general, who transfer from more of a corporate world, they tell me about this need of being more grounded and working with people directly rather than, with commodities they can't really, fill. So I think similar vibe here. Nice.
I guess it's like the tangible aspect as well, right?
Exactly. Yeah. No, that's pretty cool. Can you share, before we get to the next question, about London Business School? How was your experience?
It was great. It was great. I mean, it's funny with the MBA because you're I had been out of education for a number of years, right? So I graduated, and showing my age now, but in 2012, and then hadn't done. You've then worked your career at one firm, and then you're going back into education. So it's a bit of a mindset switch. But it was great. I mean, it gives you the time to reflect. You learn new skills, and I think more importantly, you meet amazing people. So your network grows much wider. And I think you just become more rounded as an individual. That's cool. Which is really cool. And I think that the key thing from LBS is that there are just tons of nationalities. So you aren't just with the same crew all the time.
Super international,
And I guess you have to culturally adapt to certain things, which is quite interesting. I guess it's relevant for business more generally, right?
Yeah. No, that's really interesting. Amazing. Let's get to Imbiba a little bit more. So the big investment focus is on leisure, education, and healthcare. Can you tell a bit more? Sort of. First of all, generally about the firm, about the thesis, and why specifically these verticals that you guys focus on?
Yeah, so Imbiba is a really interesting one. So the backbone of the fund was, so we've got two funds. The first fund was raised in 2017, which is a 50 million fund, and we're currently deploying a 90 million fund, which was raised at the back end of 23. But if you take a step back from its earlier iterations, it was effectively what you could call independent sponsor, doing deal by deal work. And so that was within the hospitality sector. And so it's a very entrepreneurial firm founded by two entrepreneurs who raised some capital and made some money in effectively the gastropub era. At the late 90s, early 2000s. And then the team was institutionalized in terms of bringing people in who had the skills. So, people from other private equity funds, but also particularly on the operating side to actually have the value add. So now the thesis very much is backing best-in-class businesses within, as you say, leisure, education and healthcare. leisure is the kind of, that has been the legacy, and it will still continue through
Yeah.
part of the business. But
Expanding to this, yeah.
exactly, we've expanded the verticals, and ultimately the common theme throughout all of these things is like it's a people first business.
Amazing.
And it's all experience led. So whether that is the likes of Farmer J, which I probably have too much of, or or F1 Arcade, or if you look at the education side, right, the nursery
Yeah.
businesses that we're invested in, the day nursery businesses, and then you look at the wellness side, One Rebel, all of them, the common
Yeah.
theme throughout is people and experience led businesses.
Nice.
So that's what we do. We are, like I say, backing best in class growth stage businesses. Typically, are investing for minority positions.
Okay.
So it is pure growth play, and we're generally equity investors. So we're aligned with the trials and tribulations of a business,
That's really cool.
and are hoping to back best in class founders of what they do.
Nice. That's really amazing. The question I have on that is, what would you say? What would you say is an advantage of this specific edge on the of this edge between physical and digital businesses? Because from my understanding, majority of them they're tech powered, like tech enabled in some way. Like, what do you think this advantage? Because everyone obviously hears about venture funds and this stuff, but I think this one is actually like underestimated by the general audience. What would you say, like, the advantage of this specific niche?
I mean, it is having a niche in and of itself, right?
Yeah.
So we're on the operating side, we are very big on. I mean, most of the portfolio businesses we have are location based, and we know what we know. We know what we don't know.
Yeah.
What we know is how to scale location based businesses.
Yeah.
We do have tech elements and a lot of tech enabled businesses, and we also have a couple of portfolio businesses that are tech based and are online. But those are to the extent they're adjacent with existing strategies, right? But we have an in-house property director who helps portfolio companies on a day-to-day basis to find new sites. And I think it's actually you build quite a lot of loyalty of having a physical led business.
Yeah.
And
100%.
someone I was speaking to the other day was kind of saying it's the concept which I'm now going to steal is clicks to bricks, right? So you have the online element and the tech enabled business, but actually that manifests through the locations of the businesses themselves.
Yeah.
And having that customer loyalty, I think you can really build that up through having a physical presence. So a lot of the stuff we do is finding new sites, taking the load off founders to really kind of like, this is where the value add piece is on the operational side.
Yeah.
And helping grow those businesses. So, we've just, you might have seen it in the press, exited Pizza Pilgrims. That was a business that we grew from, sites in the teens to 20 plus over 4 years effectively. So it is kind of helping to supercharge, but also sustainable growth.
That's really cool. That's amazing. No, I think that's a very, very huge advantage, because a lot of like the sort of, not the concern, but the opinion I have on like purely tech businesses is, which are like, it also has a its place to be, but the problem with tech business is it's so easy to overinflate the actual value, and with the physical, like, more viable element, it's it has some tangible backing behind besides the actual tech. So I love that, honestly.
And I guess you can get to grips with it, why it works or doesn't work.
Exactly.
And there's no getting away from it.
100%. Yeah, 100%. The other question I have on this aspect is, when is the edge of physical and digital? How do you, like, what metrics or like sort of what signals to invest are you looking at? Like, in startups, obviously it's early stage, so it's hard to look at the actual metrics. In this case, like, what metrics are you looking at when making an investment?
Yeah, it's a good question. I mean, look, we generally are investing in businesses that are generating about $1 million of EBITDA.
Okay.
So these are cash generative businesses. That are looking for an injection of capital or strategic support to grow. So we're that strategic partner along that life cycle of the journey. In terms of, but that's, it's not a bright line distinction.
Of course.
And we've invested in some earlier stage businesses. F1 Arcade was very early, and other businesses are slightly later stage as well.
Yeah.
But in terms of key metrics, I mean, similar to what I was mentioning before around people, it is about backing founders first.
Okay.
And the quality of the founder and the management team is super, super important. So we can talk about the financial metrics, the cows come home, but actually ultimately
it's about people.
It is about people.
Okay, perfect. That's amazing. On the other hand, when it comes to the red flags, what are some things that immediately sort of, in the deal flow within this audience, like, give you, a feeling that, it's not the right thing to invest in? Are there any things like that?
Yeah, it's I guess there are red flags. Probably they're not like instantaneous red flags.
Okay.
They're like as you work through the diligence or you're speaking with the founders and operators.
Yeah.
I think one of the things that we are really, really keen on is making sure that we're aligned day one as to the vision of the business and where the founders and operators want to get to.
Okay.
If there is misalignment there about exit or the right sort of backing,
Like
or
being unrealistic, kind of. Yeah.
totally. And we're not the sort of investors to meddle in the day to day.
Yeah.
We're there to provide support and lean on.
Perfect.
But if we're not aligned around how that's going to work in practice,
Yeah.
that's when it's like, it could be the best deal in the world.
Yeah.
But at some point it's going to come
course.
unstuck.
Yeah.
And I guess some of the other things that we see is somewhat unrealistic forecasts, or the numbers don't turn out the way that they are kind of portrayed, projected. And I think that's not, there are elements where you're going to get wrong, totally, in terms of presentation. But I guess where there is that disconnect, that's probably the piece where it's like, we might need to think twice about this one.
Yeah, no, 100%. And in terms of the location, it's only UK or Ireland-based businesses, right? So it's nothing intentional at the moment.
So everything we do has a UK nexus.
Presence,
so it's a UK domiciled fund, and part of the rationale is like, we know the UK really well. So across the portfolio, it's not just London; it's across the UK. We have a real quite unique insight as to what's performing well, what's not performing well.
Yeah.
City by city, region by region.
That's cool.
But the portfolio companies have gone further afield, so it's quite exciting that Pharma J are opening up in New York.
Exactly.
Very soon. One Rebels in the UAE.
Yeah.
F1 Arcade is opening up in Vegas soon, and they've got multiple cities across the US. So I mean, what we're doing is providing the foundations for those businesses to then help them go further afield as well. Nice.
That's really amazing. The next question I have is in terms of the the challenges. So with consumer-facing brands, it goes a bit different from tech. In this field, what challenges have you seen founders facing, across the journey? Obviously, it is a bit later stage, so it's probably not that many challenges. But from your experience, like, sort of, what challenges do these founders face?
I think one of the things is mindset. So a lot of the founders, it is their baby in terms of the company that they built, and rightly so. Yeah. And so they're, in terms of moving from that firefighting founder mentality to a growth mindset, and getting the right team of people around you in order to build that, and build the ecosystem where you can then, as a founder, focus on the growth aspects of the business and not have to dive into the weeds of every single part of the business.
That's interesting.
I think that's where you kind of want to get to.
That's interesting.
And so it's that kind of switch.
That's really cool.
And I think ultimately, it goes back to the property piece.
Yeah.
But where you're a single site or two site business, it's all well and good. But as you scale, you slightly move from a pure founder to then a leader of other leaders.
Yeah.
That's true. It's again just going on that journey.
Yeah.
That it does require a slight switch in mentality from the founder. I mean, it's one that people have really, really taken up in terms of the people that we've backed.
Yeah.
But that is something that you need to get to grips with.
Yeah, 100%. No, I think that's to be honest, I think founders in the very different verticals face this issue, because I think there is a saying, I don't know if I'll pronounce it properly, but the saying is that unless you get to the position where you manage, other teams rather than, doing handwork, you're just a very highly paid freelancer.
Yeah.
So I think that's somewhat about that, when you actually need to get to this sort of people management level. Like, anyways, you can't really avoid it. So.
And then it goes to culture, right? Because then you're like, you're trying to build a culture around you that is unique to the business, probably unique to yourself.
Yeah.
And you need to have people that are going to buy into that culture.
Exactly. Yeah.
So as the business scales, that becomes ever more important.
Exactly, no, 100%. We touched up on property a little bit, so let's get a bit more into that. So the property, from my understanding, plays a big role in operations. Can you tell, a bit more how exactly it works for the companies that get into work with you?
Yeah, for sure. So we provide a lot of property support, and so that comes through finding new sites. So, for example, if you ran a location-based business, you could say to us, find me. I know and actually a lot of the founders, in fact, almost all of them, have great gut instincts of where they should go.
Nice.
But that is then backed up by, data, whether that's CACI, ACON, whatever that looks like.
Yeah.
But they would say to us, look, we're looking at these sorts of locations.
Yeah.
Go and find us the best deals in those. And typically they are off market. So our in-house property director, Kieran Sherlock, he was at Yo Sushi, Black Sheep Coffee, when they were really on the charge.
Cool.
And so having those relationships with landlords and understanding, again, with our portfolio being quite broad across the UK, what's doing well, what's not doing well, we then go and find those sites. Ultimately, it's the team's decision as to where to go. But we find those sites. negotiate them up front.
Okay.
And really trying to take the load off the founder to free them up for other things. And then I guess as you then scale again is, it's that third, fourth, fifth site, or, hopefully additional sites thereon. Nice. So it's helping on that aspect for sure. Okay,
cool. So pretty much curated support for the property, search management, all that stuff.
Yeah.
Nice. That's really cool. Yeah, because the way I found out about it, I was reading through the articles published at Imbiba, and there was one specifically about property market, like in the UK, and I was like, okay, how is that really? And I started like diving into it more, and I got where it comes from. That's really cool. The next question I have is, can you share a deal that from Imbiba deal flow that you're most sort of proud of or excited about, maybe in the current pipeline or maybe the existing one, like some case study that you have to share?
Yeah, it's probably a couple of interesting ones. So in terms of one relatively recent that we helped scale and had a really successful exit of, you can look at Pizza Pilgrims, which was a very authentic Neapolitan brand, which Tom and James, exceptional founders, brought in a team around them with Gavin and Sophie to just help support them on that journey and take it from what was a really, really successful business to something that then they could realize the potential of that and ultimately exit. As a similar and really interesting business that we dealt with a lot is a business called Little Houses Group.
Okay.
That was quite unique. It's effectively a family members club in West London, which we invested when it was a single site. Okay. We took that to 2 sites, and it had a day nursery component alongside, and ended exiting that to a multi-billion-dollar real estate fund, effectively. Amazing. Who are now going on the charge for that business. But again, the USP of these was obviously a really, really strong product offering, really strong founder team, and a scalable and route to scale. Exactly. So those are 2 in terms of the exits, and actually one that we've just completed about a month or so ago. Is one that I'm biased because it's one I worked on a lot. Was a day nursery business called Nanny Annie's. Okay. So it's a 2-site business in northeast London, which we have existing nurseries in the portfolio, and I sit on the board of a business called Abacusark in southwest London. Nice. But it's really helping that business alongside the others to scale and go forward. Amazing. Again, these are like best in class in what they do.
Yeah, no, that's amazing. That's a new one, right? I haven't seen anything online about it.
Yeah, it is. It's very fresh.
Cool. Nice.
Hot off the press.
Some insights we have here.
Yeah, exactly.
That's amazing. The one I also really, really want to ask about, because I'm passionate every day, which is House of Gods. Can you tell me a bit more about this deal? Because that's the first deal I think I've learned when I learned about you guys. So yeah, can you share about this one specifically? Maybe some insight on the release in October.
Yeah, absolutely. It's so House of Gods is a very, very unique hotel brand in Scotland. So we've got sites in Edinburgh and Glasgow. It is unapologetically extravagant. Yeah. It's effectively modeled on the kind of Orient Express type vibes. Okay. And is a brilliant kind of offering that is differentiated to the market. So you're looking at kind of one night stays. There's a brilliant rooftop in Glasgow, which has now become a kind of a bit of a hub for people to go to. Yeah. But the really exciting bit about that business is now we're bringing that down to Canary Wharf. And so you might have seen some stuff recently about that, but effectively there's a building in Middle Dock in Canary Wharf, which sounds like your neck of the woods, which was purpose built for the Arts Club. Cool. That deal didn't actually happen, and so we have gone into a partnership with Canary Wharf Group to take the lease on that building, and are putting in 3 concepts: so a live music venue, an event space, and then House of Gods hotel at the top. That's amazing. So that will be its first foray into London. So nice. You guys should come down to the opening.
That was great. For sure. No, I'm glad to. It's really interesting about House of Gods. I remember going to their website first time, and they had a tagline, get treated as a celebrity or something like that. I was like, I got excited right away about this project. So pretty cool.
I mean, they've got some great activations, right? They've got activations with like the likes of Pharrell, Rod Stewart. It's a very cool business.
100%. No, definitely. Cool. The next one I have is the following. So some of the, despite mostly it's been physical businesses. Some of them, like Lace or F1 Arcade, they are still tech they enabled in some way. My question is, from your experience, what you've seen, and it's a bit related to what we do at Yotewo. Have you seen the founders, facing scarcity or issues with tech talents when they were building those products? Have you heard any stories about that?
Yeah, I think it's hiring across the board is quite difficult. I guess it's finding the right people for the right roles, and ultimately, sometimes when you're scaling these businesses, it's understanding when you need that resource, and sometimes getting the right people in early is really, really important, so that you can really go on the charge with it, and not lose out on opportunity effectively. So I think it is definitely on the tech side. Albeit, I think the UK and London, while you hear a lot of negative press, has an amazing pool of tech talent.
Exactly.
So we're quite bullish on the talent here, and we really want to back it. But it also then feeds through into other sectors where it's quite tough. It is quite tough. And it's better to be realistic about that. So it is sometimes you do need help to find the right folks for the business.
Great. Then the next one I have is personally it was my most expected question, because I've recently really looking sort of more into this field. What is your take on roll-up investments? Is it something that you guys, because it's very close to what you guys do, not like specifically matches, but what's your take on that? Because I've been recently really excited about this tendency in general, so wanted to have your thoughts on that.
It's a timely question, actually, because we are seeing a lot happening in the space. So I guess where we see it more often is, so we've seen it in the day nursery market quite a lot.
Okay.
We've seen it as we do more in healthcare. There are, the dental roll-ups have been done. There is, interestingly, a lot going on in aesthetics and MSK at the minute in terms of roll-ups.
Okay.
It is something that we have looked at and will probably continue to look at. I think where the challenge lies is integration. And so it can work in a whole number of spaces. And actually, when I was a lawyer, I worked on one of the kind of vet roll-ups, and that was for independent vet care, which I think is now Evidentia. But that whole business was based on, you've got a super fragmented market. You've got very unique businesses. Can you put them together and create economies of scale? And that definitely works in some sectors. I think what we've trended towards is the organic platform. And really, while we haven't implemented a buy and build approach, it's kind of thinking quite critically about having, how do you plug and play the, new businesses. So we've developed a lot on the organic. I've explored M&A. We haven't done roll-ups quite yet, but that's not to say that we wouldn't do, and we've certainly seen a lot of it. And I think it's really that integration piece, where that's cultural, operational, that really needs to be worked through. So on the face of it, great. The reality of it is that is a bit more tricky. Any accountant, even law firms now, you're totally right on the property side. There are roll-up plays happening.
Exactly.
So it is definitely an interesting space.
Cool. Yeah, interesting. Perfect. The next one I have is about the UK and London in general. How do you assess, because there are controversial opinions. I'm always advocating for the UK and for London in terms of the deal flow, but would love to get your opinion as well in terms of this region. How do you assess it for the deal flow, for pretty much opportunities to invest in at the moment?
Yeah, look, I mean, I'll be biased, and I think the UK is great, and we are a UK domicile fund, so maybe I would say that. But we see a lot of talent, a lot of amazing businesses that come across our desk, some of which fit the profile of things we're looking at, other things that might be amazing in their own right, but we just can't do. It might be for a slightly smaller shop than us or a bigger shop. But I think, coming to the point I was mentioning before around, you see a lot of negativity in the press around the UK and
the agenda.
Exactly. Things about the budget, employment rates today, but actually, something we were talking about a lot in the office is actually about celebrating the wins. And you've got a lot of amazing businesses 100%. Here who probably don't get the recognition they should do.
Exactly, 100%.
So, there's a lot of talented people here. There's a lot of really, really unique ideas. And actually, certainly in the tech space, you've got, you see on my LinkedIn feed is now flooded by really successful businesses from the UK and Europe.
100%.
You look at the likes of Fixer, for example, and it's gone absolutely mental.
Exactly. Yeah. So would you say it's still the good way to? Yeah.
Yeah,
100%.
it is. It is definitely. It's
Cool.
definitely a great place to be and a
Agreed.
great place to invest. And actually, I think there's a lot of focus on London.
Yeah.
But there's a lot of untapped potential
Outside, yeah.
outside of London.
I agree.
Definitely in the regions, we do a lot of our origination directly.
Nice.
So it is going directly to businesses.
Nice. That's
Which
really cool.
we've done our kind of research on.
Yeah.
Going to reach them out directly and speak
Yeah.
to them. So it isn't just London focused. I think there's a lot of talent in and around
Yeah.
the UK more generally.
That's really cool. No, I 100% agree. I actually like totally share this one. I also look like more opportunities outside of London, and also I think in the next sort of 3 to 4 years, everyone like outside, the industry, everyone will see the positive economic impact of the country in general. I think it will be like bouncing back to the more, previous economic levels in terms of the whole economy. I think so. I think we're definitely.
I hope so.
Yeah, I hope so too. Yeah, but I think it's actually going to be this way sometime soon. Cool. And the last one, I got super quickly to the last one. So yeah, the next one I have is looking ahead. What trends or innovations are you looking after in either the field of specifically like growth investing, or maybe the verticals that you guys are invested in, like healthcare and education and stuff like that? Yeah, are there any interesting things that you are looking after in terms of tech and like how the things are changing in terms of,
Yeah, I mean, it seems to be, I guess on the tech side of things, everything's changing so rapidly.
Yeah.
One of the things that we're thinking about quite consistently, because we are investing in consumer services businesses,
Yeah, exactly.
consumer-led businesses, is discovery.
Okay.
So one of the, we're honing in on what is I know it does probably sound like a broken record, AI. What is AI doing to disrupt these industries?
Yeah.
One of the key things that, like I say, that we're focusing on is how do businesses now get found?
Yeah.
And what do you need to optimize for in order to get found? So I think there's a lot of work going on behind the scenes across the portfolio to optimize for that.
Okay.
And I think there are, we've had some some folks come in who know the sector really well to say, well, these are the small quick wins that you can do.
Okay.
Everything's changing so iteratively and day by day. You can't really foolproof it.
Yeah.
But that's a headwind, or a headwind, but also potentially a tailwind in terms of just revolutionizing certain things in the sector. And on tech more generally, we've got an investment in a business called Opener, which is a hospitality tech platform, common data model, which ultimately is moving towards price optimization. So being able to have the likes of bigger businesses really kind of tailor their pricing accordingly to whether that's events, whether that's peaks and troughs, and really kind of, I guess, eke into where they should be optimizing for.
Amazing. It's specifically for hospitality, right? Or
correct?
Does it?
Yeah.
Okay.
So you have the, it's we invested would have been January or February this year.
Okay.
But the idea is really to disintermediate a couple of existing operators where there is probably not the same connectivity that Open provides, and really kind of scale out the additional modules. So it's a really interesting sector, and it's something that we probably will see kind of growing going forward.
And I assume other portfolio companies they are using the software as well because it relates to hospitality. So I think
totally. I mean, it's I think what it's really geared towards is businesses of scale.
Yeah.
Because a lot of it's site based.
Okay.
But what it allows you to do is really kind of optimize for your inbound. So whether you've got the likes of delivery providers who are, they call it tablet mania.
Okay.
This is a kind of single source of truth that allows you to aggregate everything into one.
That's true.
Cleansed data format.
Yeah, amazing. No, that's really cool. Well, Nick, I think that's pretty much it. Thank you very much for coming and joining for the podcast. I really, really enjoyed the conversation. I'll leave links to your LinkedIn and to Imbiba website and all the necessary links in the description. And yeah, Nick, thanks so much for coming, man.
Yeah, thanks, man.
Thanks so much.